How's it going out there? Welcome to Stock Talk with Mike. If you watch my channel, you know I'm still really bullish on the e-commerce industry. I think it's got a lot of room to run still. E-commerce still only makes up about 15% of our purchases, and that's expected to grow up to about 60%. And globally, e-commerce is growing at a rate of about 20% per year. So today I want to talk about two companies, the behemoth e-commerce plays that just reported quarterly earnings, and that's Amazon and Alibaba, and talk a little bit about their earnings report and what I think it means for their stock price moving forward. But quickly, before we get into it, please consider subscribing to the channel, and it'd really help me out also if you liked this video. Amazon just reported an absolute behemoth of a quarter. They reported $125 billion in revenue on the quarter, and the expectations on the quarter were $119 billion. And that's actually the first quarter they've ever hit over 100, and they had 125. It's funny because Apple actually also just hit 100 billion on a quarter mark for the first time ever when they just reported earnings, and it was, I think, around 111 billion. So Amazon absolutely destroyed their number as well. So pretty crazy stuff. And they provided some guidance for Q1 of 2021 of staying in that $100 billion range with guidance of around $100 to $106 billion in revenue next quarter. But actually, that's not what the impressive part. The really impressive part was their operating income, which is actually their profit just before tax and interest. And that was up. So their profit was up 77% year over year, which is just crazy. So it was $6.9 billion, and it was on the quarter, and it was expected to be $4.5 billion. So that was a 54% beat on profit. So that is absolutely incredible, especially the company of their size. Just going over the full year revenues real quickly. North America e-commerce up 38% year over year. International, and I've talked about this in a previous video, the importance of international, but up 40% to $104 billion now. That's over a third of their e-commerce business now. And even if you think North America is well subscribed now for e-commerce and the runway is going to shrink, there's still massive opportunity internationally, and it seems like Amazon's moving into new countries all the time. Amazon Web Services up 30% year over year. But the news that really stole the show was this announcement by Jeff Bezos that he was stepping down as a chief executive officer from Amazon. So this is just mind-blowing news. He's still staying on with Amazon. He's going to be the executive chairman on the board with Amazon, where he's going to play an active role still and be involved in new products and innovations and new initiatives. But I think it caught everyone off guard that this happened right now without any warning and this quickly. Andy Jassy, who is now the CEO, who was the CEO of Amazon Web Services division of Amazon, had been being groomed for this position. And honestly, he's been with Amazon for 25 years. So just 2 years after Bezos even founded Amazon back in 1994. And Bezos himself, as the founder, said Amazon's in really good hands with Andy Jassy. And the fact that Bezos is still going to play a really active role, as crazy and big a news as it is, I don't think it's a needle mover as far as the performance of Amazon. This is the one-day chart of Amazon, and looking at after hours here, it was only up 0.27%, but I was watching this live on CNBC today when they announced after hours, and immediately the stock, when this was announced, just shot down immediately well into the red as like traders were trying to digest this news. And then it kind of quickly came back up when they saw, I think, the great results Amazon reported. But honestly, I think with the results Amazon reported and the fact that they've been flat basically for the last 6 months, without that announcement, Amazon would have been well up after hours. I think investors just didn't know how to absorb that information. I think you'll see the share price start to move back up. So I did a previous video on Amazon that you can check out here that looks at some of the big growth drivers, I think, for Amazon moving forward in Amazon Pharmacy and international markets, e-commerce like India. But I'm feeling really good about my price target for 2026 of over $10,000 a share, which would be a 25% year over year annual return. I haven't rerun the numbers, but just this quarter for full year 2020, it just blew the numbers I was already using out of the water. And the revenue growth projections I use year over year for the next 5 years, I'm feeling even more comfortable with For example, I'm using online stores North America growth of 20% year over year for the next 5 years. And in 2020, that was 38%. International, I'm using 30% year over year next 5 years. In 2020, that was 40% growth. I'm using 25% per year for Amazon Web Services. That was 30% in 2020. So even if revenue grows or slows a little, I think those averages could happen easily for Amazon over the next 5 years. I'm feeling really good about this price target for now. Next, I want to talk about Alibaba, the e-commerce player in China. Their stock has been on a bit of a wild ride the last few months, from its previous highs above $310 a share. Their founder and previous CEO, who's now retired actually, but Jack Ma, he's still the largest shareholder, had been getting more boisterous against Chinese regulators, and it seemed to result in a bit of a retaliation where their Ant Financial IPO ultimately got halted. And Alibaba actually has a 33% stake in Ant Financial. So that caused quite a big sell-off, as I think investors were concerned about potential additional regulatory restrictions being imposed on Alibaba. And that was actually realized in late 2020 when it got announced that Alibaba was being investigated for anti-competitive behaviors by limiting sellers on their platform from selling product on other competitor platforms like JD.com. And that caused a big sell-off where in one day their stock sold off from over $250 a share down to about $210 a share. And I actually added to my position at around $222 a share. But ultimately, it's kind of climbed its way back up till the time of this earnings call. Alibaba was down on the day after reporting earnings. They were down about 3.85%, up about 0.71 after hours. But honestly, it was a pretty good earnings report. Revenue was $33.9 billion, and it was expected to be $33.5. So a small beat, and that was a 37% year-over-year revenue increase. Earnings per share were up 21% year over year to $3.38, and they were expected to be $3.17. So another small beat. Not knock the cover off the ball type numbers, but it was a beat. I think the stock was down because investors were hoping for some clarity regarding the regulatory concerns and basically just got no new information. So that was a bit disappointing, I guess, but it also had been running up a little bit leading up to today. So I think there was maybe some optimism that we'd get some clarity. So we just got an update from regulators that they have reached a deal with Ant Financial, which is going to require them to be put into a holding company, which is a lot better outcome than some investors initially feared. Obviously, we still have the uncertainty looming around the investigation into the anti-competitive behaviors, but I think this is a perfect example of why you don't always want to overreact to the big clickbait news that happens, like the one that caused a big sell-off in Alibaba. But shares seem to be recovering nicely today, at least the time of posting. Alibaba does offer really good value proposition for its growth. It has a trailing PE of 27 and a forward PE of 20. The S&P 500 right now has an average of 34. So it does trade quite cheap, especially for the growth you're getting. Obviously, there's some risks here with Alibaba, but I do like its value. So as I mentioned, I do really like e-commerce, and it's still a growing trend, and I plan to continue to ride that wave. I have about 20% of my portfolio in pretty pure e-commerce plays. Of course, all these businesses have other elements to their business, but I really do like Amazon still as a top 5 holding. I do have a heavy weighting in Alibaba as well. I also like C Limited, the e-commerce player out of Singapore. And I like Mercado Libre, the e-commerce player in Latin America. And as more of a spec play, I really like Jumia Technologies, the e-commerce player in Africa. Anyways, that's all I have for you today. Thank you so much for watching. Happy investing.